Welcome back to Crypto Warehouse. I am Mike and I am with Julian.
Hello.
And today is a very special broadcast. It is a bank run special. You'll find out during the course of the next 45 minutes what's happened, why it's happened, and why we think that Bitcoin is probably the only solution to this banking situation. But before we get any further, Julian, how was your weekend?
Great weekend. Yeah, had visitors over.
Did you?
First time in years. That was nice. And watched the football and yet another victory. It's getting quite boring now.
It is getting very
3s
boring.
and 4s every week. It's joyous to watch. We're bullying people.
I was expecting to play you next season.
Yeah,
I
could be.
I don't think we are. I think you're going to go up and we might go up at the same time.
Too early for us to go up.
Possibly.
We're not ready.
Possibly. Right, well, before we get into anything, I think what we need to do is start the widget on the countdown.
Yep.
And then we need to go to have a quick look at the crypto prices.
So it might go.
Well, you're going to know what the price is.
24,320.
I'm going to go for 24,221.
It's because you've got it in front of you.
It's exactly why I've got it in front of me.
Have you got it exact?
Yeah, I'm spot on. Actually, no, it's 24,221. But before we go any further, today's been a good day for crypto in general. Market cap is over $1 trillion again. We had a bit of a dodgy weekend. The volume is 111 billion, which is
big,
4 times what it has been. So there's a lot of trading going on.
Yeah.
We're going to get into a bit of the whys and wheres later.
Yeah.
The dominance, 43.5% for Bitcoin. That doesn't mean anything because it's been 43% for about the last 6 months.
It's a safe haven.
Safe haven. That's where you need to go during a crisis.
And we could be headed that way.
And I think once people have listened to the show all the way to the end, they're going to find out that this is a little bit bigger than a bank in Silicon Valley.
Yep.
Excuse me. Okay, so let's move on. We've got a few word on the birds.
We have.
I think this one is pretty damning. So Biden said he would come out Monday morning and give a speech on how well the banking industry is going. And what he did was he gave a 5-minute chat. Nothing to worry about, nothing to see here.
Yeah.
And then the questions started, and Biden did this.
President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect? Do you expect other banks to fail, Mr. President? Should all...
He walks off.
At least he walked off on his own.
Well, he
Just
walked
give
off.
him a couple of weeks and he'll need assistance.
I think he walked off to the wrong door because that looked like the cubbyhole. Because you can clearly see there's
it's
a
a
bucket
toilet.
in there.
I think
There's a
it's a
toilet.
toilet,
Yeah,
yeah.
he's gone for a quick one.
It's got one of them wide doors as well, like a disability one.
Yeah.
It's probably got handrails on so he can lower himself.
So Biden's walked off.
Yeah.
Have to basically say nothing to see here. Everything's fine.
As a bank has just crashed in America.
Yeah. So it's not good. But we're going to get into, after we've done a few shorts, we're going to get into the very beginning of why all of this has happened.
Yeah.
So we're going to go all the way back 2 or 3 years
Yeah.
to explain why we are in the situation we're in,
Yep.
and explain that this isn't just to do with a single bank
At all.
at all. So this is, you like Harry and Meghan, don't you?
Yeah,
Big
well,
fan.
I'm watching something this week about apparently there's a shortage. They're not being able to give out MBEs quick enough.
Haven't they?
There aren't enough royals there to actually do the job. So there's people waiting to get their MBEs.
Really?
It's down to the 3 N's. Natural causes,
Yes.
notoriety,
Yes.
and Netflix.
Well, Harry and Meghan
Yeah.
stand to lose millions in the collapse of Silicon Valley Bank. Sources claim that accounts were set up for them and Harry put his millions in there. Now, we're going to find out a little bit later on that he hasn't lost his millions, but it's still funny to laugh at him, isn't
It
it?
is, yeah. I mean,
It is.
His advisors are great, aren't they?
Yeah. Yeah, I mean, everything he's done, every branch of the stupidity tree,
Yeah.
he's hit on the way
All
down.
the way.
And
Every
it-
one of them.
And the best thing is, it's a very, very tall tree, and I don't even think he's halfway down
No,
yet.
it's like one of those reds that grow in Canada, isn't it?
He's just on a Homer Simpson loop
Yeah.
of hitting every branch.
So,
Right. Now, we're going to get onto a bit more of this, but this is an example of what's happened. If anybody watching doesn't know, the entire banking system in America is grinding to a halt, and we're going to go into the specific examples that happened on Friday and last week. But as of today, all of these banking stocks have been frozen on the New York Stock Exchange
to protect them from themselves.
to protect them from a bank run
Yeah.
and also from all the stocks to be sold off. I mean, some of these listed here and ones we're going to go into later, some of them are down 60% in pre-market trading. So it's pretty devastating what's happening at the minute.
Yep.
So let's start at the very beginning as to why all of this has happened. And we have to go back to that period of time when we were all made to stay at home.
Yep. But we've been talking about this for a long time, haven't we?
We have. And the issue is that most countries printed money.
Yep.
We printed money in the UK.
Yep.
That money was then paid out in furlough
For people to do nothing.
for people to stay at home, use Amazon,
Yep.
get home
My
takeaways.
question on that is, where did all that money go? Because they couldn't go out, could they?
It was Amazon and...
But why? No. That wasn't what it were meant for, is it?
No, it wasn't.
So why didn't they all save some of it up, like I would have done?
Because people's natural habits, when they're bored, is to spend money.
So the government gave them money,
Yeah.
which they didn't have to give them.
Yeah.
They spent it.
Yes.
Then the government, as a result of that, has to tackle inflation,
Yes.
which means that my cauliflower was more expensive than it was,
Yes.
which is your fault.
Yeah.
But if I'd have saved the money, I wouldn't notice the price of the cauliflower going up because I'd have plenty in the bank.
No, the inflation that we've suffered has been a result of a couple of things, hasn't it?
Yeah,
We've had what's happening over there.
yeah.
We've had...
But it's not, yeah, in the main, though, it's down to the printing of the money.
It is, but it's compounded.
Yes.
So if we'd have just had the money
We
printing,
still have an issue.
we'd have an issue, but it wouldn't be as raging as
No.
much as it is now. So if we go back to the beginning, let me just... Have we got any comments on the sound?
No comments on the sound.
Perfect. So America printed 3 trillion in 2020. Now, if we skip through the article, it's not important. What is important is what happens when you print this amount of money. And there's 3 things. High inflation, which we've had for the last 18 months.
Yep.
Rising interest rates,
Yep.
which we'll go on to a graph with in a minute. And market volatility, market volatility happens when other things compound it, because there's so much money swilling around. Demand goes through the roof,
Yep.
inflation goes through the roof,
Yep.
and any other outside external influence that comes in just compounds it.
Yep.
So what's going on in the Ukraine right now just multiplies the effect.
Yep.
So just to give you an example, because this is a very nice explanation, but graphs tend to do a better job. Now this is what's happened in America in the last 12 months. And we have gone from an interest rate of 0.25%, we have gone up to 4.75%, which is what, 4.5% increase
Yep.
in 12 months.
Yep.
That's the biggest increase in the history of America. The Fed has been hawkish now for 12 months in trying to get on top of inflation.
Yep.
So we are in this situation because America printed 30% of its currency in a year.
Too much knocking around.
Exactly. And what the Fed have tried to do in the last 12 months is kind of suck all of that excess money out of the economy
Yep.
by bringing down demand. And by doing that, they're trying to make sure it's more expensive to buy a house.
Yep.
Interest rates have gone up. People are losing their jobs. Companies aren't borrowing money
Yep.
from banks, which we'll get onto in a bit. So the entire situation we're in now is because of the Fed's actions to try and scrape out that inflation from the economy.
Well, in fairness, it's the only thing that they can or should be doing.
There's nothing else they can do.
You've got to get on top of it.
Yeah, exactly. Now, there's a theory or there's a calculation where to bring inflation down, interest rates have to sit above. So there's inflation. Interest rates have to go here and push it down.
Yeah.
We haven't quite reached that point.
Yeah.
But I think in March, April, May, we're going to get to a point where inflation gets below 4.5%. And then maybe Chairman Powell will go from hawkish to dovish, but we'll see.
Yeah.
So Ben Cowen, who's one of the best guys to watch on Twitter, very clever bloke. He's got a double masters.
Has he?
He's a rocket scientist, I think, as well.
Wowzers.
Yeah, and some kind of engineer.
Brilliant.
Seriously clever bloke.
And he was a left winger at Aston Villa, wasn't he, back in the 80s?
Was he?
Yeah, with Peter With.
So, what he said was that now we're at 5%. There's a thing called terminal rate, and it's basically the point at which you can't go past the terminal rate, or everything's going to come crashing and burning.
Right.
And it's a little bit like chicken.
Yeah.
So you've got a brick wall, and Powell's behind the seat of the car, like crash test dummies.
Yeah.
And he's got to get as close to the wall as possible and brake without ending up like James May. Was it James May that ended up in the wall?
Powell's going to think this is like platform 9 3/4.
Well, that is a good possibility. I mean, the wall doesn't go anywhere, except Chairman Powell might
Through his skull.
exactly. He might. What's the word for it now? He might envisage himself on the other side of the wall.
Yes.
Even though his body is a crumpled heap in the wall with a big dent of a squashed man like that in the wall. That's what I think Chairman Powell's going to end up like. So he's broken it. Only 7 days ago, he came out and said, we're still going to push up interest rates. Everything's good. Nothing's broken. And look where we are.
Look where we are.
So, where are we?
Is this the bank?
Yes. So, SVB is Silicon Valley Bank.
How big are they?
They are huge. They have something like $220 billion.
Yeah, I'd never heard of them.
No, they're more of a venture capitalist bank.
Okay.
So what happens is when you want to go and start your Uber company or Deliveroo company up,
Quite techie-based.
techie-based company, you'll go to Silicon Valley and the venture capitalists will say, right, open an account here, we'll put your cash in here, and you use this to trade. So they're not really retail
Yeah.
They are, and they do have retail clients, but they're not really
That's not the main focus.
correct. So this is the biggest bank failure since 2008.
Yeah.
Now, I remember 2008,
Tough times.
as I'm sure you do.
Yeah.
And I remember what happened was one bank went bust. Was it the Lehman Brothers? Or was it
Lehman
another
Brothers
one?
first? Yeah.
Yeah. And then nothing happened for about, a week or two, maybe 2 weeks? And then everything else came crashing down around it.
You're like a wobbling domino.
A bit like a wobbling domino. I don't think that's going to happen this time,
No, I don't think it is.
but
either.
we'll get on to that shortly. So, basically, they're the biggest bank to fail since 2008. What they did was they called in the regulators and said, we're screwed.
So what's the reason behind them actually becoming untenable?
So, in 2008,
Yeah.
the banks were paying out money for stocks or
Yes.
funds that were invested in what's called a subprime mortgage.
Correct. Very,
Which-
very risky.
Yeah, which is a very fancy word for saying giving money to people to buy houses that they can never afford to pay back.
Yeah.
It all went to hell in a handbasket because the valuations of those properties were never what they were said they were going to be, and everything crashed.
Yeah.
This is different.
Okay.
They've been given all of this money by these venture capitalist firms. All of these banks are now a little bit safer than they used to be.
So they're not going to put the money in risky assets.
No,
So where have they been putting it?
in entirely the opposite direction. And they've been
Too safe.
too safe. And they've been buying what are called T-bills,
Right.
which are treasury bills
In America.
in America. But because they've bought them from a period of time before this interest rate hike, they've been buying them at 1% and 2%. And they've
Oh.
been passing the money off to you, and you've been getting 0.5% rather than what's going on in the markets. So what's happened is they've got 210, 220 billion assets under management, earning, let's say, 2%. So why not, for argument's sake, they're bringing in $4 billion of income per year for the bank. Except Chairman Powell, in the space of 12 months, has added 4.5%.
So their 2% is now virtually making losses because you could get 4% outside.
Correct. But what you can't do is you can't sell them very quickly because nobody wants to
Who
buy
wants
them.
to buy them when they're doing less than what you can get elsewhere?
Nobody's going to buy them, exactly.
Yeah.
Except the big problem is when you deal with venture capitalist firms, such as Silicon Valley Bank have been doing, these people have got tens, if not hundreds of millions of dollars in the bank.
Yeah.
So if they're sitting on 50, let's say they're sitting on $100 million, and they're looking over here and they can get a 4% bond,
You've got to take it out.
they're going to take the money out.
Yeah.
What does Silicon Valley Bank do with a bond it can't sell? It has to sell it at a discount.
Yeah.
So for every 100 billion, every 100 million that's taken out, they're having to sell 110 million worth of bonds to get the money to pay these guys and stay liquid.
So basically they're losing money on cash flow.
Yeah,
Create cash flow, they're having to suffer losses.
exactly.
But that's not sustainable.
No. So what's happened is they've got to the point where they've gone, the more money we pay out, the more money we lose.
Yeah.
So we've now got to the point where we don't have enough assets to cover our liabilities.
Yeah.
And there's been some talk saying, well, they're not insolvent, they're not this, they're not that. Insolvency is when you don't have the money to pay your debtors.
Yeah. So they are.
So they are.
Yeah.
And it's clear as day.
Yeah.
But they're not the only bank this has happened to. Silvergate has also,
Which we discussed a couple of weeks back.
correct, has also gone bust. And I think there's a third bank which over the weekend, the regulators went in again. I don't know if it was in California or Texas or somewhere. They've gone in again
Yeah.
to basically lock them down. So this is what's called a shit show.
Quite.
There's no other way to describe
No.
it. So that's who they are.
Okay.
I don't think we need to go on to any more of that, apart from to say that over the weekend, the Fed, Janet Yellen, all the usual anti-crypto people got together and tried to put together a package to not bail them out, but stop contagion. So contagion is, if I tell you there's no toilet rolls left,
Yeah.
every supermarket in the UK is going to run out of toilet rolls
Yeah.
because everyone's going to rush out and buy them. That's contagion.
I'm feeling a Brogan moment in his absence, because what we want is people to actually get that contagion and subscribe to our channel. That was like a one-show tenuous link, that was.
We do. So anybody watching,
Yeah, Peter, hello. He's joined us.
Hello,
Along with
Peter.
Web Superstar.
hello, Web Superstar. Thank you for
Tell your
joining.
friends. Let's get one more subscriber to the 200.
We need one more click
Yeah.
to hit 200
Really wanna
subscribers.
see those fingers.
See those fingers. So any questions you've got, leave them with Julian,
Yeah.
and we will answer them at the end of the show.
Exactly.
Won't
Because we've got a deadline. We're trying to get through things quick. We have a lot to cover off.
We have. And I keep forgetting, I keep leaving it on the articles, don't I? So let's get on to the next stage. So you asked?
Go on.
No,
sorry.
I'm not. We've got an awful lot of this
Yes.
thing to go through.
Yeah.
So you've asked for a visual representation. So Washington Mutual Bank in 2008 went out of business with 300 billion in assets.
Okay.
That was at the time of the subprime mortgage disaster. Silicon Valley Bank is just over 200 billion. But as you can see, between the grey lines, which are quite faint, they've almost got parity with deposits. They're not that short.
Not that short, no.
No, I think they're short by, based on this graph, probably about 30, 40 billion.
It's still a bit, though, isn't it?
It's a little bit.
Yeah, even between friends, it's a lot.
It's a little bit. I'd be smarting if I was at the bar
Yeah.
and you say, listen, I can't get the rounding.
Yeah.
A, I'm from Yorkshire,
Yeah.
but B,
I'm 30 bill down.
I'm 30 billion down.
Yeah.
And then that'd smart me,
Yeah.
having to buy more pints of John Smith's. So this is the bigger hole, which goes across everything. Between the banks in America, they are $620 billion in loss. Now, I'm going to ask you,
Is this all to do with the putting the money into these T-bonds then, basically?
that and the value of those bonds have gone down over time, yeah. So when they bought them for 100
Were they
billion,
instructed to actually structure more safely and pointed in this direction?
they were, yeah.
Which, to be fair, at the time you would have done, because
Yeah.
they were just getting out of hand.
This is exactly what risk management is about.
Yeah.
You've been naughty,
Yeah.
you've been caught, you didn't come in for tea, you've
Tried
had,
to be greedy.
you've had your leg slapped,
Yeah.
right, and you've had your ball taken off you.
Yeah.
And next time you go out, you know you've got to be home before the sun's down, right?
Yeah.
You've got to be there for tea.
Yeah.
They've been caught, bit of a slap, nobody went to prison, as lots of documentaries have demonstrated, nobody's gone to prison. So they've gone, right, we're going to be uber safe and we're going to go for treasury bills because they're government backed.
Yeah.
What they didn't expect, which is again, I tweeted out the other day that they would have seen 2 or 3 years ago that printing 30% of the money was going to push inflation up.
But we already knew this. We've been talking about it for 6 months.
I know we have.
We're both retired.
Yeah, I know. But
But they're doing this for a business.
Yeah.
We're putting our money with them to look after it.
Yeah.
So how did they not see it coming? Well, we're going to see, I think, later that they did see it coming. But even then,
Yes.
too late.
They saw it too late, exactly. And the issue is, anybody in crypto who's been in crypto for 2 or 3 years, they are going to know about macroeconomics, US economics. They're going to know about inflation. They're going to know about interest rates. They're going to know about the SEC.
Yeah.
They are going to have more knowledge of world economics than some guy in risk management, because all the guy in risk management is going to do is, it doesn't matter. We're making $4 billion a year. We don't need to worry about anything else.
Yeah. We were good last month.
Exactly.
Next month looks great.
Precisely. Until we break the system
Yeah.
by trying to catch inflation, which we've got to do.
Yeah.
And what these banks should have done, probably 12 months ago, was seen where it was going and gone, you know what, we need to get out of this.
Yeah.
I know we're going to make a short-term loss, but we need to get our cash out.
Level up the portfolio.
exactly. And they need to say, right, we know the interest rates are going to go up, which means the treasury bills are going to go up. So we will dollar cost average into the American treasury bills, and then we will start to say to our clients, listen, interest rates are going to go up. We're going to start paying you 1%, 2%, 3% a month.
That's it.
That's all they have to do. So let me go back to, look at that. I'm switching screens like a pro here. What are we up to now? Oh yeah, okay, so this is a nice list of all the banks that are probably going to go bust. So, Silvergate has already gone.
Yeah.
SVB Financial Group has already gone. Now, there's no smoke without fire, and I reckon anything on here with the word bank or Bancorp is probably also going to suffer.
Yeah.
So there's going to need to be some kind of fail-safe catch-all system within the American
Europe, you see, we don't really recognise many of these banks, do we?
No, we don't.
It'd be interesting to see whether anybody watching does.
Yeah.
To give us a rough idea on size of these people.
Yeah. I mean, some of them are fairly big,
Yeah.
but some of them are not. Thing is, in America, a small bank in America is 50 billion assets under management. Whereas in the UK, 50 billion, it's not huge, but it's not small either.
No.
Because everything in America is 5 times the size of ours in terms of numbers. But there's probably going to be another 4 or 5 of these that are going to go out of business or sold off in the next probably month or so, which isn't great.
At all.
No. So, talking of the UK...
Yep.
We've got some information here. We're not onto the insider trading yet.
No.
That's got to be something that people need to like and subscribe.
Absolutely, because that's going to be quite interesting.
It is.
Particularly what comes on the back of that and the person that's held the steering wheel throughout this period.
Precisely. So if anybody watching wants to guess what insider trading has to do with, leave a comment and Julian will read them out. And if you're close, you might win a very special prize at the end of the show.
You got a prize?
No.
Okay.
No prize. So, why did Silicon Valley Bank collapse and how did HSBC rescue its UK arm?
With a quid.
With a quid, precisely.
Why didn't we buy it? Should we have bought it?
I tried.
Did you?
Yeah. Rishi wouldn't pick up. I got through to Matt Hancock.
Where's he been today, Rishi?
Rishi has been...
He's all around the world, isn't he?
What's he been? He's been trying... Oh, no, he's been at the seaside.
Has he?
Yeah, with his sniper rifle.
Trying to pop them boats again.
He's trying to pop them boats. So, the bank was relatively unknown in the UK. I'd never heard of it.
Me either.
But now everybody who's in finance will know what's going on. So, we don't need to know about this because it's already been covered. And so, basically, there's a UK arm of this bank, and this is where contagion comes from because some of these banks are so huge. They have arms in the UK, France, Germany, Singapore, Hong Kong. They're all over the place.
Yeah.
When one of them goes down, it brings everything with it.
Yeah.
Now, the UK, for some reason, the UK is so far ahead of America in terms of making decisions. I don't know whether it's the lack of numbers. I don't know whether it's the fact that we're more used to making decisions.
Decisiveness.
Decisiveness.
I mean, look how long it took them to join World War II.
You know, I need a red card. I need a red card in here. That's absolutely... I can't even throw that. It's got something heavy in it. I might kill you live on air. So...
Joke.
So by Friday... Now, bearing in mind, the Americans had sorted this out by Sunday evening.
Yeah.
The Bank of England had sorted this out on Friday night.
Brilliant.
And what was going to happen was it was going to be bought by the Bank of London, which no one's ever heard of. It's a clearinghouse. So I was thinking maybe the Bank of England are buying this through a vehicle such as the Bank of London to get it into the UK and to get it safe and
Ring fence it.
Ring fence it, exactly. Then HSBC stepped forward and has said that basically they were going to basically buy it because it's a venture capital business in the UK. So all of their clients are going to be big tech firms
Yeah.
and people with a lot of money. So they've stepped in. I think they bought it for £1, like you've said. And what HSBC can do is they can absorb the short-term liquidity problems.
It's good news for confidence, though, isn't it? We're all about confidence.
Yeah,
So if you've got another UK bank going in there,
yeah,
showing that not only are we not going to be affected by this, but we're actually going to spend money to go in,
yeah.
that breeds confidence.
Absolutely. Absolutely. I think so. So they've bought it out, and in doing so, they've got all of these clients. They've protected the UK.
Yeah.
The Bank of England will have been involved somewhere along the line.
Yeah.
So that maybe they've granted them the license, maybe they've put cash in to allow them to do it, but they've done something. And what I would expect to happen in the future, because Silicon Valley Bank's name is now gone, I'd expect them to become HSBC or HSBVC
Maybe.
or something like that.
Nice, that.
Nice, that, isn't it?
Yeah.
Copyright.
Definitely.
Crypto Warehouse 2023. So I think HSBC are going to walk away with a pretty penny.
Yeah.
Now, we are on to the scandal. Has anybody guessed what the scandal is?
I don't think even anybody's had a go.
Is anybody awake?
Yeah. They're all on about wanting the prize, but not putting up the ideas. You can't have a prize just for nothing, can you? I mean, that's
No.
like school these days on sports day.
No, you don't win.
We don't work like that.
No likey. No, what's it?
Prizey.
No prizey. So, I'm going to say something to you now. I'm actually going to put you on full screen.
Go on.
Julian, what do you think of bankers? Do you think they are the bread and butter of society?
No.
Do you think they're angels in
No.
human form? What do you think of them?
I think they've created a profession out of something that isn't a profession. You don't really go to college or uni to get a banking qualification, do you? So they've tried to tie themselves with lawyers and accountants, but they're not. And I think it shows at times like this. When decisions need to be made and when you need to see trends and actually read outside what is right in front of you, they time and time again fail.
Would you find it surprising if I said to you that the CEO had sold shares in Silicon Valley Bank 11 days before the crisis?
In a way, I'd like to say yes, but no, I'm not surprised at all because they look after themselves, as we've seen with the bonuses and all that shenanigans.
So what you'll see
That's what's happened, is it?
what you'll see on your screen right now,
So they did see it coming.
Gregory Becker, the CEO of Silicon Valley Bank, he sold 11% of his shares. Now, you're going to say, why didn't he sell all his shares?
That would have caused another bank run.
There are a lot of stipulations to being the CEO
Yeah.
of a listed company. You're not allowed to sell, let's say for argument's sake, 15% of your shares in one go.
Yeah,
He doesn't want to cause too much concern.
yeah. But do they not have enforced trading windows? Why is that not a thing?
I don't know.
That they can only sell between certain dates?
They have in the UK,
Yeah,
because when I've watched, for example, Rothschild Investment Group,
yeah.
the board, they all sell on the same day.
Correct, because it opens and closes
Yeah,
to avoid this.
yeah,
This is just profiteering.
yeah. So it's not just him; it's the financial officer, and also the CMO. What's CMO? Medical officer,
Marketing officer.
marketing officer. That sounds
managing
good, doesn't it?
officer.
So Daniel Beck sold 32% of his holdings,
Oh,
and Michelle sold 28% of her holdings. And this all happened 12 days before the bank run. Now,
see, even if it's 12 days, that is a sign of incompetence. Because this has been coming for months. Do you know what I mean? I know they saved their own skins or attempted to, but still, pretty incompetent to leave it so late. Are they going to go to jail?
I think they sold their shares in Silicon Valley Bank 11 days before the crash,
Yeah,
because I think they thought that by the time that it hit the fan, they would have sold, cleared the money,
yeah,
And by the time it came out that they'd sold their
Everybody's
shares,
looking left while they've moved right.
now 11 days ago
Yeah.
would have been, for argument's sake, the 1st or the 2nd of March. They probably don't have to report their shares being sold until the end of the month,
Yeah.
which would have been the 31st of March or the 1st of April.
Yeah.
So they've sold at the first opportunity, knowing that they weren't going to see out this month at Silicon Valley Bank. They've known this, and they've timed it to be the day after their reporting schedule is
Shocking.
is supposed to go through,
Yeah.
knowing they've got until the 1st or the 2nd of April to either bail out, collapse, or walk away.
Yeah.
And the irony is, the CEO came out on Friday or Saturday night with a video saying, listen, we all need to stick together. We've been through worse than this. We're all a big team, and I hope whatever happens. And he's already walked off with $4 million. Utter disgrace.
It is. Is there a second bit of bad news for these people?
There is. Who do you think?
Is this the CEO?
Yeah. No, this isn't the CEO. This is the Chief
AO.
Administrative Officer.
Yeah.
Who do you think he worked for? Let me put you on the spot. Let's put the
The
mastermind.
going.
The mastermind camera is now on you.
The way that this is going,
Yeah.
definitely something to do with Lehman Brothers.
So, Julian,
Yeah.
first question.
Yeah.
Who do you think the Chief Administrative Officer of Silicon Valley Bank, who do you think he worked for in a previous life?
It's got to be Lehman Brothers.
Is that your final
That's
answer?
my final answer, yeah.
That's your
I
final
haven't
answer.
even got another answer.
Should we take a
That's
look?
the only answer.
Let's take a look,
Go
shall
on.
we?
Can see where this is going.
I've got everybody watching this on tenterhooks. You know that?
Is that because we've got a delay?
There we go. Joseph, gentle by name, gentle by nature. Prior to joining the firm in 2007, now point something out. He jumped ship the year before the bank went bust. So give him his dues.
Right.
He saw it coming
Yeah.
and jumped ship.
Yeah.
Mr.
Don't think you can
Gentile,
say that.
should we call him Gentile?
Can't say jump ship or anything like that.
Why not?
Not at the moment.
Oh, that's true. He served as the CFO, Chief Financial Officer, for Lehman Brothers Global Investment Bank. Now,
Do you reckon he wore big shoes and a red nose?
can I ask you, in the interview,
Yeah.
what kind of question would you say? How's your previous experience? Oh, well, I was in charge of the greatest ever financial collapse. I actually put a complete bank worth 400 billion out of business.
And the world into meltdown.
And the world into meltdown.
It's impressive, that.
It is. Do you reckon he was juggling at the same time?
Yeah.
I can juggle it. So he worked for Lehman Brothers.
But you can't make this up, can you?
No, you can't. And I haven't made this up. I've actually gone off and done this research.
Web3 is asking, is this actually legal?
Is what legal? This stream? I
No,
don't think so.
The fact of what they've done, is that actually legal to
No.
actually sell out their money?
It's insider trading,
Correct.
and they will go to prison for it.
Yeah, quite rightly.
Yeah.
And
And
it's diamonds like that that need us one more subscriber.
and
We're desperate for them 200s.
and Joseph Gentle.
Yeah.
Now, he's that bird. You know when you go pheasant.
When I first read that, I thought it said Joseph Genital.
Well, I imagine he's got a huge pair
Like, he's got to
to
have.
get away with what he's done.
Absolutely.
So
Yeah.
I reckon he's that pheasant that's dodged you.
Yeah.
Do you remember that in those films where there's always a ship chase, like Jaws?
Yeah.
He's out there. We just
Yeah.
have to catch him.
Yeah.
He's the pheasant that got away in 2007.
Definitely.
And the SEC and FDIC, they've now shot him straight in the gentiles.
Yeah.
And I reckon he's finally going to go to prison.
Yeah.
16 years after he should have gone to prison.
Yeah.
And I tell you what, they won't be gentle with him in prison.
I wouldn't have thought they will either.
Oh, no. Absolutely not. Now then. So, I think it's now time to move on to some crypto-related news.
Well,
because
all that has been crypto, because we're going to see. All that negativity in the financial markets has fed into positivity in crypto.
Yeah, exactly.
Let's tie the two together.
Now,
Why?
this
Yeah.
is big.
Yeah.
And fortunately, it's now been...
Overshadowed.
Yes. So, USDC is one of the three major stable coins.
Yeah.
So that we talked about this before. $1 of USDC is $1.
Yeah.
So it's dollar for dollar, pound for pound.
And doesn't go up or down.
And shouldn't be
So if you're trading in crypto and you want to have a little break before you decide your next move, put it in the stable coin, because by definition it says stable, even though the markets around you are going up and down.
Well, that would have been in my advice up until Friday last week. And now we can't trust the banks.
Already we knew that.
We did. So what happened was USDC has an awful lot of money, 80 billion or something like that.
Yeah.
And they keep that money in banks because that's what you do. You keep the money in banks.
Yeah.
But you keep your money in multiple banks.
Yes.
Obviously, don't put all your eggs in one basket.
Yeah.
And the issue was that when Silicon Valley Bank went bust, Circle had, I think, $8 billion in Silicon Valley Bank.
That's a lot, isn't it?
Yeah. And the problem was that, or not, the saving grace was they asked for all of their money to be taken out on Thursday last week. There was a deadline of Thursday evening, and they said anything before Thursday evening we will honour, you'll get all your money back. So a lot of what we're going through here doesn't need to be talked about, except what happened here, which is the USDC chart, which I'll show you on the screen now. Now, what happened was it depegged. And last time a stablecoin depegged was when UST, the Terra stablecoin, went from $1 and has now ended up at 3 cents because it doesn't have anything to back it.
Yeah.
So this is what happened on the screen here. If I move it up a little bit, you'll see that it dropped to 88 cents, which kind of took into account the fact that it was $8 or $9 billion in the hole with the bank. But as you can see now, we've completely returned to parity.
Yep.
Primarily because everybody now knows two things have happened. One, Silicon Valley have turned around and said, you're going to get all your money back. So you don't need to worry.
Yep.
It's all good. Secondly, Circle turned around and said over the weekend that if there was a hole, like Vanilla Ice, we'll solve it.
Yeah.
Right?
Check out your
receipts.
Yeah.
Because Circle will solve it.
Brilliant.
Yeah, exactly.
Is this Silicon Bank actually going to be able to fund paying everybody else back, or is this the US government coming in to do this?
This is the US government, and we've got a breakdown here.
So they didn't do this on the Lehman Brothers debacle, though, did they?
No.
But they're choosing to do it on this one?
Yes.
So now every bank that goes defunct from now on can expect a handout? Is that right?
Now,
or are there certain people in charge of this bank that we like?
I'm going to run through why they've done it.
Right.
But first I'm going to tell you how they're going to do it.
Yeah.
So, this was the solution put forward by FDIC, Janet Yellen, the usual, the Fed. Every depositor, including the unsecured depositors, get paid in full. So everyone's going to get the money back. Sounds great. It's going to use bank taxes.
Oh.
Now, apparently, this is not taxpayer dollars. The interesting thing is that no matter what tax a government collates, it's come from you somehow.
Yeah.
Because you are the, whether it be a company spending money or whether it be you spending money, you're spending money with that company.
Yeah.
So the taxes that the company pays are from the profits from you. So to turn around and say it's not taxpayer money is probably a little bit. Exactly.
Yeah.
So that's a good thing. Everyone's getting the money back. So Harry will get his cash back.
Yeah. Will he have a time delay on that, do you think?
There will be a time delay.
What's he going to do with his security?
I think he'll be fine, won't he? Hasn't Megan's got a few quid?
She's doing an advert for coffee apparently now, isn't she?
All she's got to do is jump on OnlyFans.
Yep.
Quick Q&A.
Yeah.
TNA,
Bingo bango.
bingo bongo,
Yeah.
and away we go.
Yeah.
Should make that money back in no time.
No time at all.
No time at all.
It's coming as well.
It will.
That's the next move.
It
It's
will
a
be.
career move.
Exactly. So number 2, equity and stockholders go to zero. So everyone who's got any shares in that company's just lost everything.
Except for them that traded in 11 days earlier.
Yeah, they're going to be in prison though,
Ah, well,
and it won't be gentle.
no.
No. Number 3, the 25 billion at par fund. No idea how to explain this in English, so I'm not going to bother. But basically, the bank can borrow money from the government, dollar for dollar,
Okay.
and use that to plug any remaining hole.
Right.
So I think it's a mechanism for trying to stop the bank from going insolvent while the money gets taken out.
Right. Okay.
So basically, these measures will probably stop a bank run without using public funds, which is getting back to your question you were asking me about why they didn't bail out the Lehman Brothers.
Yeah.
Politically, there were some banks that were saved, like Goldman Sachs, because the chief advisor to the president is always ex-Goldman Sachs CEO. So Goldman Sachs were never going to go anywhere.
Yeah.
Lehman Brothers, probably too much of an annoyance to Goldman Sachs to be kept alive.
Yeah.
So they were allowed to go out of business. In this instance, they're trying to stop this becoming a banking problem and keep it to a Silicon Valley.
Economy won't take it like it would in 2008.
No, it's on its arse.
Yeah. Got to control this.
Yeah. So that's what they're trying to do, and that's why they're bailing them out, to see off another
Yeah.
bank run. But I don't think this isn't 2008.
No.
People should not go to their banks thinking that they're going to be able to get the cash out and put it somewhere safe. There is nowhere to put it safe apart from, of course, what we're going to talk about at the end, which is Bitcoin.
Yeah.
That's where we think it should be put. So that's where that is. So back to USDC. We've gone through that. Everything's fine and dandy.
Yeah.
So the last part of this, because we are running out of time. Have you seen the time?
I know.
We've got a minute left. Let's see what we can skip to. Right, let me just skip very quickly through this. Let's put this back on screen. So, CZ has basically said that they're trying to shut down all the crypto-friendly banks,
Correct.
and they have done.
Yeah.
At this moment in time, there is no on-ramp in America for crypto.
Yeah.
There's none left,
Yeah.
right? So that's what he's basically saying there. This basically talks about, we've talked about this before, Binance, BUSD was Binance's stablecoin, which the SEC turned around and said, this isn't regulated, it's not secure, you've got to stop it. As it's proved, it's probably more resilient than any bank in America.
Yeah.
So they packed that in. Now, what is this?
Quick question going back to the bank. How much did they have on deposit and how much do they have to have on deposit, percentage-wise?
Most American banks, let me put you back on screen so you can ask me that. Do you want to ask me that question again so I can answer you properly?
Yeah. So in any jurisdiction, I guess, but in America, how much percentage does a bank have to hold on deposit by law?
So banks have what's called fractionalized reserves.
Yeah.
And that means for every $100, they normally have to keep between $1 and $3 in cash.
Okay.
Now, before 2008, it was about 50 cents to $1.
Yeah.
Since 2008, I believe it's $1 or $2. So it's 1 or 2% of the funds. So out of 200 billion, say, they probably have 4 billion in reserves. Now, to put that into context, when FTX went bust, they had 11%.
Yeah,
fractional
we've
reserves.
said that they were badly managed.
And they were badly managed. If you look at Binance, which we've got some details we can't go into because we've run out of time.
Yeah.
If you look at Binance are over collateralized.
Yeah.
They've got $65 billion in assets, excluding client funds.
Incredible.
Client funds are kept 1-to-1. Now, if Binance can do this,
everybody should.
Why can't banks?
Yeah, totally.
So
the business model's all wrong.
It is, and it'll have to change sooner rather than
But
later.
one way that they could improve it is by actually accepting Bitcoin.
Well, we're going to get onto that in a minute.
Yeah.
So we're not going to get into any of this because we haven't got any time. But basically what this guy is saying, that there was a bank run on Binance in December. There was 10 billion withdrawn in about 48 hours.
Similar to the bank that's just gone under.
Correct. And Binance walked out the other end actually being more collateralized than it was. CZ was going around doing his usual tours because he knew he had all the cash in the world to support the bank run, knowing that they were never going to need to do what Silicon,
Yeah, as they should do.
Now, what CZ has done, I'm going to try and keep this as quick as possible. What CZ has done today, he said, I've got $1 billion recovery fund. And what that means is if there's a crypto company struggling and in trouble, Binance, with a conglomerate of other crypto companies, will bail them out. Now, it isn't free money. You have to give a percentage of your business to Binance. He said, I'm not keeping this in dollars anymore because I can't trust it. So he's taken $1 billion and he's going to invest it in Bitcoin, Ethereum, and maybe BNB.
Wow.
So there's going to be $1 billion worth of buying pressure in the next 2 days on Bitcoin, Ethereum, and BNB.
Good news.
Great news. Then the IMF, the International Monetary Fund, have warned that widespread Bitcoin and crypto use could cause banks to lose deposits. Now, let me ask you a stupid question, Julian. Why are the IMF
Yep.
concerned about people buying crypto if the banks are being hindered from allowing their customers to buy Bitcoin through them? It's a little bit like hitting you in the face and then asking you why you're being hit in the face.
Totally.
Shouldn't the IMF be turning around and saying, this is a new form of currency, this is something that we need to be moving towards because we're going to have the digital dollar or the digital pound, the digital euro. We're going to move that way.
Turn the taps on.
Otherwise,
you're just leaking money out, aren't you?
What happened when people were investing in ISAs?
Same thing.
They bought them through the banks.
Correct.
Stocks and shares, they bought them through the banks.
And why? Because another $3,000 going out of the bank all mounts up and you're causing a little minor bank run.
Precisely.
Particularly if they're only owning 2%.
Yeah. So create a list of verified ISO 2022 crypto currencies.
Even a top 10's enough.
Yeah, exactly. Bitcoin, Ethereum, Polygon, add all of them, and then create Bitcoin funds that the banks can offer to their clients. And then people aren't going to be saying, I don't even have to leave my bank to buy Bitcoin.
Yeah.
But no, it's now seen as the enemy. But this is the final stage. So they laugh, they ignore you, they laugh at you. We're at the stage of them fighting you.
Yeah.
The next stage is accepting you.
Yeah.
So we're almost there.
Yeah.
Almost there. And we are almost there as well. So the Bitcoin price is recovered.
Yep.
We don't need to worry too much about that. And then the last thing is, people say to me all the time, Bitcoin isn't real money, which is a fair enough comment because it's digital.
Yep.
And I found a very simple definition of what money is, which I'm not going to read them all out.
Go on.
So you've got durability, portability, divisibility, fungibility, scarcity, and acceptability. If we focus on scarcity and acceptability, the scarcity problem is why we're in this shit show in the first place, because America printed 30% of its money, like we've said.
It's not scarce, is it anymore?
It's not scarce. Bitcoin has 21 million Bitcoin.
And that's it.
We've mined 19.8 million.
Yep.
3 million, including Satoshi's million, have gone forever.
Yep.
So we've got 16 million Bitcoin. What's going to happen to the price of Bitcoin?
It's going to go up.
It's going to go up. There is no other asset.
As Web3 saying, to the moon, he thinks. It's going to the moon.
He said it was going to the moon before it hit 19,800, though.
Yeah, he's used the terminology baby as well, which I never like.
So the thing is, once people can accept Bitcoin and maybe Bitcoin's the wrong word. Maybe we should use cryptocurrency. Once people can accept cryptocurrency in their business,
Yeah.
and it can be done to buy cups of coffee and your shopping and things like that, like we've shown in Africa, then we're there.
Yeah.
But out of the 6, I would say Bitcoin ticks 4 or 5 of the boxes.
Yeah.
But out of the 6, I'd say the American dollar ticks about 4,
Yeah.
because it's not scarce anymore.
Nope.
And acceptability, we've already talked about Russia, China, and India using the cryptocurrency to trade oil.
The dollar.
So then the dollar's not going to be the reserve currency anymore.
It's in a mess, America, financially, I think.
Absolutely.
It's financial thinking. Maybe not financially. Maybe that's the wrong way.
There's only...
It's thinking and about how it's a very, very close society, in my opinion. Look,
I would say there's only one man who can save America,
oh no.
and that man
Oh no.
is Donald Trump. Because he alone...
It looks like a what's it with a quaver on top.
He does, and I know that's your favourite
It's my favourite
comment
joke
on him.
and all that.
But he inspires confidence because, listen, he's immoral, he's corrupt.
Business side of things, yes. Everything else, no.
Exactly. So what we need Biden, what's left of him,
Yeah.
to basically
Is
be...
he out of the toilet yet, by the way? Because we've been
No.
on for an hour.
He's still there.
Is he?
We need to take Biden, we need to give him a nice, put him in a nice chair,
Yeah.
comfortable chair,
Ideally with a commode underneath.
yeah, and then leave him there,
Wheel him somewhere.
yeah, and tell him he's still the president of America,
Yeah.
yeah, and give him a microphone so he can talk to himself in the old people's home.
Yeah.
Bring in Trump, who will get rid of all these stupid laws.
Yeah.
He isn't on the side of bankers. That's where people are
Can we
wrong.
put all the other residents in his home in like a semicircle and tell
Yeah.
him it's Congress.
Yeah, we can.
I feel bad for the guy.
Yeah, and a bib. He needs a bib.
Always. With the drool.
Yeah, and the cap needs to say MAGA, but he never gets to see his cap because it's on his head and he forgets it's there. All right. So we do that to Biden because he's a waste of space.
Yeah.
But we bring in Trump or DeSantis, Ron
Don't
DeSantis.
know anything about him.
I think he's California or Miami, one of them. I don't know. But he is very pro-business, anti-lockdown, liberties, giving people their freedoms. He's against central bank digital currencies in terms of spying on people, things like that. So either of those two, for me, next president of America, and we need somebody to bail us out of this because the Democrats have been a disaster. And even though they're only, 5%, 10% of the world population, they're a pain in the arse,
Yeah.
aren't they?
Yeah, they are.
And on that bombshell, do we have any questions from anybody in the audience before we
I
log
haven't got
off?
Any questions? It seems to have gone quite quiet for the last 10 minutes.
I think what we've done,
We-
I think we've sent everybody to sleep.
Either that or we've sent them running into the internet banking facilities.
In sheer panic. Right, well, we are back when?
Thursday.
We're back Thursday. Hopefully Brogan's exams go well this week
Absolutely.
and Rebecca's exams
Yeah.
go well this week. And we
They're
will...
only mocks, though, aren't they?
They
They're
are.
only quizzes,
They
as I
are.
like to call them.
Yeah, but it gets him to skive off from coming in here, doesn't it? That's the thing.
Yeah.
He's a big skiver.
Do we know if we've got the 200 subscribers? I'm getting mixed reviews on you.
I don't know whether we are. Should we go and look at the channel?
Can we do that live on air?
I don't know whether we are. Let's go and have a quick look.
Have a look.
I don't know whether we are. Let's go.
Oh,
We are at 200 subscribers.
no way.
We are at 200 subscribers.
That's incredible, isn't it?
This is great news. I'd like to thank every single one of you for sticking by us and for putting up with myself and Julian and Brogan when he's here. And we are back on Thursday with a longer show, Crypto Chill. We won't have Brogan, so it'll be us two again. I think we should probably try and half the show and do half of it about the fallout from this.
Yeah.
And then I think we should look at some bang bangs.
What's bang? Oh, some shoot 'em up, third person shoot 'em ups.
I think what we should do is try and find one we can actually play live on the show.
Happy to, as long as somebody shows me what I've got to do.
Well, you'll have to sit here.
Yeah. We take it in turns, do we?
No, I think you could.
Just me.
Just you. on the
Happy to
stream.
do that.
And we'll play some Bang Bangs.
Yeah.
And we'll have a bit of music, and we will have a little celebratory. Maybe we leave the celebration until Brogan is actually
I think we're
back.
peaking too early. We should leave the celebration until we get to a quarter. 250.
You said when we celebrate when we're at 200.
Did I?
Yeah, you've moved the goalposts.
I think we should be aspiring for better.
I've had a bottle of champagne in the fridge for 6 months waiting for this day.
Not 6 months. We were at 100 only 3 months ago.
Yeah,
We've kicked ass for these next hundreds.
we certainly have. So anyway, thank you everybody for watching. And we will see you all on Thursday.
Yep. Thank you very much.
Goodbye.
Click and
Now,
subscribe.
click and subscribe. I've got to press this outro thing now, haven't I?
Oh, is this our favourite music, or have you got rid of it again?
I've no idea. But if people can still hear us talking through the outro, I think that'd be brilliant. Should we try? I'm going to press this button now. It says outro, but it's black.
Oh.